Hey everybody, welcome to my masterclass. Today we're going to be talking about the solvable problem. So you guys have probably heard me use this term. This is a trademark term from Dan Nicholson as part of his certainty operating system. And it's the instrument we use to help us know whether we're getting closer to the things that we want in life or whether we're just chasing more or potentially even getting further and further away. So when I think of the solvable problem, I think of it as essentially taking your goals and the things that you want in life and turning it into a math equation. Now, I realize that not everyone here is technically minded, and that's okay. The solvable problem, we will give you the right tools in order to create your solvable problem. Again, we use this as a way to get closer to the things that we want without taking on any more risk than is absolutely necessary. Okay, so let me start by describing the Google Maps example. And so the way Google Maps works is it works off of a solvable problem. So when you go to Google Maps, it asks you for two things. It first says, well, where are you right now? And then where are you going? Based off of that information, we'll tell you how long it's going to take to get there based on all the laws and the speed limits and things like that. We'll also tell you the most efficient path to get there. So again, you have to give Google Maps these variables, and then it will solve for the amount of time it takes to get there and solve for the most efficient path forward. So if you're using Google Maps and it asks you, well, where are you? And you can't give a clear answer on that. Well, it's going to try to approximate it, right? So if I say I'm around Colorado, it's just going to guess, right? It's going to make a guess on where you are. Same thing if you were to say, again, I live here in Denver. If I was to say, well, I'm here in Denver, it's going to approximate that. Now, the more specific you can be, the more helpful Google Maps is when you can give it a specific address and say, I live at 123 Main Street in Denver, Colorado. Great. Well, now we can start exactly where you are. And then it's going to ask you another question. It's going to say, well, where are you going? If we don't have a specific place that we're going, it's really hard for Google Maps to work out the most efficient path to get there. So, for example, if you were to say to Google Maps, well, I'm here around Denver and I want to go north, Google Maps is going to have a real hard time with that because north can mean a lot of different things. From Denver, you could go north to Seattle, you could go north to Minneapolis, to Chicago, you could go north to New York. All of these things are technically north from Denver. It could also take you down south and bring you back up around north too. The point is that if Google Maps doesn't know where you're going, north is not a problem that can be solved. That's the definition of chasing more. So when you guys hear us talk about the first wealth commandment, we want to get closer and avoid chasing more. This is what we're referring to. We have to give our math problem an actual problem to solve here. So if you were to use Google Maps, what is it trying to do? It's trying to tell you how to get to your destination safely. So if you had to get somewhere in, let's say, an hour, you needed to get from, Denver to Fort Collins, and you needed to get there in an hour. And you typed it into Google Maps, and Google Maps said it's going to take you an hour and 15 minutes. That's pretty helpful, because it tells you either need to leave 15 minutes early, you need to extend your timeline, or you might have to speed a little bit. You might be running some red lights. You might be running some stop signs. You are probably having to take on a good bit of risk of not only to your safety, but also to getting pulled over, potentially even going to jail, right? If you have to get somewhere that you're going and you don't have enough time, you might need to extend your timeline. This is why Google Maps is so helpful, because it tells us how long it's going to take to get somewhere. And we can apply that same methodology in our business. So again, The whole point of the solvable problem is we need to create a single variable equation. And I illustrate that by giving a multivariable equation. To turn my camera on. So if you have a multivariable equation, it might look like this. Solve for any of these variables. There's an infinite number of possibilities here. You can't solve this equation because there's 3 variables. Now, even if I took one of the variables out, there's still an infinite number of options for X and Y here. And we do this all the time. We haven't defined the variables, so it's really tough to solve for that. But if I told you this is a single variable equation, this becomes significantly easier to solve. X is 6 in this case, right? We can easily work that out if we have a single variable equation. So what are the variables in our equation? Let's talk about that for a second. What we help people do when we think about the solvable problem is, first of all, we need to know our number, right? We're talking about the number that you need in order to live the life that you want to live. So we say we've funded what we want on our timeline, playing our game. Funded what we want is where we're starting, right? What does that mean to fund all the things that we want? It breaks into 2 categories. You have your core priorities. These are things like retirement, debt, pay down, right? You want to pay off your houses, you want to pay off your cars, all these things. And then maybe like reserves, cash that you have in your bank. Number 2, so core priorities make up the things we have to pay for in order to live, right? How much money do we need to live off of? Number 2, the second category, are preferences. So we say, it depends. It depends. And it depends. Do you want to pay off kids' college? Do you want to own a house in Hawaii? Do you want 40 acres in the mountains? These are all preferences. What we know from the certainty operating system is none of these are right or wrong. This is a matter of preference. So we need to break our solvable problem into these 2 categories. Okay, we'll come back to preferences in a second, because really it just depends. You need to take what it is that you prefer, that you'd like in life, and break that into specific numbers. Well, how much does it cost to put a kid through college? How much does it cost to buy a house in Hawaii or 40 acres in the mountains? Right? You want to take vacations every year. Okay, well, how much does that cost? These are just numbers we need to sort of work backwards to. All right, but let's talk about core priorities. So I gave you kind of 3 ways that it breaks down. So let's first talk about retirement. If you've never heard of this, rule of 4, essentially, take your annual spend and multiply it by 25. That's pretty straightforward, right? If you spend $100,000 a year, multiply that by 25, that's 2.5 million. You need $2.5 million in order to retire. Right? So basically I work backwards like this. Take whatever you need every single month. Maybe it's $10,000 a month. You know, so example is $10K per month spend. That's $120K a year. So 120K per year times 25 equals 3 million, I believe. That's the number you need to retire. So we take that number. We use the rule of 4. So again, you take your annual spend, multiply it by 25. That's called the rule of 4. I'm not going to get into that too deep, but that's probably the easiest way to create your solvable problem. I tell people all the time, like, don't get caught up in all the other stuff. The rest of the things I'm about to show you here are kind of a nice to have. If I've found that a lot of people get hung up and they say, well, should I go after 1 million? Should I try to get 3 million? Should I try to get 5 million or 10 million? It's like, well, take the amount of money you would need to spend, in your most expensive year. Maybe that's $500,000. Maybe it's $1 million a year. Multiply it by 25. You need $25 million to retire on that lifestyle. Okay, that's okay. We just need to know where we're going. We need a target. Number 2, debt. Think houses. I mean, that's pretty much what I think. Cars, I'm sure you can include that, but I just think houses for the most part. You want $1 million house? Okay, we need to add that in. So you take your retirement goal and you add in the debt you need to pay off. Number 3, reserves. So I would take your annual spend and divide it by 2. 6 months worth of annual spend. So if you spend $100,000 a year, you probably need 50 grand in cash. That is how you come up with your core priority goal. So then you take that number, again, core priorities and preferences. So you need to do some thinking about, well, what is it that I'm going to need to pay for over the course of my life, And I would err on the side of caution. You want to put your kids through college. You want to, take care of your parents when they're in their old age. You want that lake house. Again, there's no judgment here. It's just clarity is necessary. You want the private island. You want the jet. Okay, those are preferences. Add those up. Take your core priority number. And now you got your solvable problem number. This is your endpoint. Again, I'm just going to throw 10 million up here. Let's use that. Let's say you got, $7 million in core priority numbers and then $3 million in preferences. Okay. Point is figure out what that number is. And this is where it gets fun. Now I'm going to share my screen and show you guys the Certainty app. So first you want to go to certaintyapp.com. Create a little account. You'll sign in. Again, this is Dan's website. He's made this super, super easy for us to close the gap with our solvable problem. Again, this is trademarked by Dan. So we got 10 million. That's our target balance. And let's say from now, we're comfortable with 15 years, retiring in 15 years. So I'm 32. That would be by the time I'm 47. And I had $10 million. I'd say that's a pretty good win. Let's say that solves my problems in life, my financial problems. All right. Now let's say I'm starting with, I don't know, 500,000 that I've got in total investable assets. Maybe it's more, maybe it's less. That's not really the point. Point is we just need to know where we're starting. Let's say that I can reasonably throw, let's call it, I don't know, $5,000 a month. I'm going to use generate from my investments, from my businesses, and use that as additional monthly investments into my core capital, into funding my solvable problem. Maybe you can add more, maybe you can add less. Let's use that as an example. Now we've got the tax rate. What do most people pay in taxes? Something like 35, 40%, maybe even higher. But most of us as real estate investors, we're pretty savvy on the tax side, right? We've got properties we can use to offset our gains. And so let's say our actual tax rate is probably closer to maybe 20%. All right. These are the variables in the equation, guys. This is the Google Maps of your solvable problem. Okay. So what you can do is you can hit calculate. This is going to tell you the monthly return you need. Here's the annual return you need net and before taxes. So we need to net 17.8% every single year from our core capital. And if we do that, we'll hit $10 million in 15 years. Pretty simple. Problem is, simple doesn't always mean easy. This is the number we're really looking for. Because what you don't have, 17.8%, right? Let's write that down. And this is something, once you figure out your number, it's like, this is your number. You got to know your numbers. You know what I mean? It's really helpful to know that you need 17.8% return, because let's consider Google Maps for a second. It's like you got an hour to get somewhere. And Google Maps has told you that you can get there in 45 minutes if you follow all the speed limits. The speed limits in this case are the risk, right? Because ultimately what the solvable problem is here to do is inform our behavior. We want to use this as a tool to say, I need 17.8% every single year in order to hit my solvable problem. It's the same thing as Google Maps saying, you can follow the speed limits and get there in this amount of time. Now, if you need to get there faster, you might need to take on, you might need a higher percentage. The longer your time frame, the less you got to break the law, right? In the Google Maps example, the longer your time frame, the less risk you need, the less return you need. Same thing. So what happens if you're driving along and then, so you figure this out, right? I need 17.8% to hit my goal. And in year one, you're going along and you hit 17.8%. You're like, okay, great. I'm on track. I don't need to do anything. I'm literally exactly where I should be at this time. Next year comes and you have a killer year, right? You get like 50% return. It's the equivalent of catching a lot of green lights, right? Like you're getting there fast. Well, you got a couple options. One is you could take that time. I'm gonna try to stay on the solvable problem example and get off the Google Maps example. But you could take that overage. You guys have heard me talk about the barbell. We take that overage and we could use it to say, well, either now we're planning on getting there faster than we needed to, or instead of needing 17.8% every single year for the next 14 years, we might only need 16% return. So we've taken risk off the table. The goal is to get where we want to go without having to take on any more risk than is necessary. If we don't have to speed and break laws, why would we? Because, Steve Trang and I were talking about this on one of our podcasts recently, and he gave an example of his like, well, what if your wife's in labor and you're an hour away? You're an hour away and she calls you and says, I'm going into labor right now. Get here as fast as you can. you are going to probably break a bunch of laws because you're like, I don't have an hour to get there. I need to get there in 30 minutes. But also that's extremely risky because you might get pulled over, which could increase the amount of time it takes for you to get there. You could also get yourself in, big trouble with the law, which again, there's all sorts of, interesting risks associated with that. But that's the same thing with our life. If we don't know how long it's going to take to get to our goal, we don't know how much risk we need to take, because that's what the solvable problem helps us do. Tell whether we either need to take risk off the table or we add risk to the equation. So my goal is to try to establish an appropriate time frame, right? Just like Google Maps says, like, here's an appropriate time frame to get where you're going. We don't want to try to get to someplace that's going to normally take an hour in 30 minutes. That's not an appropriate time frame. So if you have to take on, let's say, like, in order to hit your $10 million and you want to get there in 2 years, and it's like you run this through the equation and it tells you need a 70, 80, 90% return. The question really is like, do I have a reliable way to get that return? The answer is probably no. Right? When we talk about reliability, that's what we're looking for. The lower the return we need, usually the more reliable it means, right? The higher the risk, oftentimes the more unreliable it is. So what we're doing here is trying to come up with that number. And if you can say, I need 17.8% every year to hit my goals, again, that's extremely helpful. So we talked about the rule of 4. If you are working on a solvable problem, oftentimes it becomes like, well, I don't know exactly what I want. My advice is just take the amount of monthly spend that you would, likely have. If it's 10,000, 20,000, 50,000, that's not the point. The point is figure out what that number would be. I could live the life I wanted to live off of X amount of dollars per month, multiply that by 12 to get your annual, and then multiply that by 25. That is good enough to start with your solvable problem. Then what you'll want to do is go to the Certainty app and plug that in with your timeline. So let's do it like this. Step 1, get your number for funding what you want. Take that number and plug it into certaintyapp.com. Once you have that, it's like, take risk off the table whenever possible. So again, if you need 17.8% return and you're chasing things that are significantly higher return because you think it's going to help you get there faster, there's trade-offs to that. You're taking on more risk in that case. So what we help people to do is to recognize the number that they need to hit the goals that they want, and then make investments that help you align with that. When we look at crypto and we look at a lot of these decentralized exchanges, there's opportunities to earn significantly outsized returns. What we want to do is avoid chasing those things and incurring risk to us as the investor, right? The higher the percentage return, oftentimes, the more risky it becomes. It's not like saying we can't go after these higher risk opportunities. We just have to consider it in terms of the barbell. How do we remove as much risk as possible so that we create only upside, right? So what happens if this changes? You're going down the road and you say, I need $3 million to hit my goal. And then you realize actually, I think it's 5 million. And then 6 months later, you realize, actually, I think it's 10 million. The first thing I would tell you is that the more things that need to go right, the less likely you are to get those things. This is a function of system reliability. So this is a fun math problem. And a case for wanting less in life, right? So system reliability says that the reliability of a system is the sum of the components of the system. So what that means is, like, let's say you've got two things that need to go right, because system reliability is always less than 100, less than 1. In this case, it's a fraction. Because nothing is perfectly reliable. You don't have anything that's 101% reliable. That 101 times out of 100, it's going to get you the result that you want. No, it doesn't work like that. It's always less than 1. So when you have two components, this one's 90% reliable, this one's 90% reliable. What's the total reliability of the system? So it's 81%, basically. So if 9 times out of 10, you make a smart investment, and 9 times out of 10, that investment makes money, only 81% of the time are you actually going to get the things that you want. But as we add components, so let's add another thing that needs to go right, that's also 90% reliable. So again, this could be just things that you want. The more things that you want, what happens? You drive the reliability of that system down. I think it's 73%, something like that, 72%. But what happens if we add one more component? But this time it's 99% reliable. So we're going from 2 components here, 81%. 3 components is 72%. You just drove down the likelihood that you get what you want by almost 9%. Well, by 9%. But let's add this other thing that is really highly likely to get what we want, but it's in addition to all these other things. You still drive reliability down. More things that need to go right always drives the reliability down. So if you want to have higher reliability and higher financial certainty, the less things that you need to go right, the more likely you are to get them. It's a case for wanting less things. You know what I mean? Like, and also we have to realize that as we're spreading our resources out across more and more and more things, the likelihood we get all of them goes down. So again, solvable problem is really helpful because we have to identify the most important things to us. And we want to build our investments and our businesses that help us solve that. So the longer your time preference, the less that you need in life to live the life that you want. I mean, I could want $100 million. Again, that's just a different risk profile. It just means that I need to take on more risk. And what does that mean? Risk in this case is that you don't get what you want. We say this all the time. The biggest risk that we run is not getting the things we want out of life. The more things that you want out of life, the less likely you are to get all of them. So it's a case for finding out what is most important to you, getting clarity on that, locking that in reliably. And then if you decide you want to go somewhere else, then go somewhere else, right? Google Maps is going to tell you the most efficient path to get where you're going in the time that you've given it. If you get there and you decide you want to go somewhere else, or you decide along the way, hey, I think I actually want to go a different direction. Totally fine. We're not talking about you can't change your mind. What we're saying is we need to have clarity, because otherwise we don't know whether we need to speed up or slow down, whether we need to do a U-turn and turn back around. The solvable problem is the Google Maps of our life. It's what informs our behavior, or should at least, right? It should tell us, this is the level of return I need to get. Am I on track or not? If I'm on track, don't do anything, right? Just go take a nap, go back to your life, go do whatever makes you happy. You're on track to fund your goals. If you're ahead of pace, you can either use that to collapse time. So we say that there's the 3 C's here. So here's the order of getting your solvable problem. First, we got to get clarity. We talked about the core priorities and the preferences. So we get clarity on the things that we want out of life, the things that are most important, the things that we need, right, in order to live the life that we want. Now, there's a whole bunch of preferences you can add on to that. So just keep in mind, the bigger the number, the more time it's going to take to get there, and potentially the more risk you need to take on. So first is we get clarity. Second, we build a machine, a system that can help us get there with the least amount of risk. So we've said this on many times in previous calls: least amount of risk, least amount of effort, most amount, it's supposed to be an A, options. So clarity is the solvable problem. But certainty is the directions, right? Google Maps tells you, hey, you took a wrong turn here. You need to turn down the street and come back around. That's how we know we're off track or we're on track, right? And we do this again with least amount of risk, least amount of effort, most amount of options. When you know you're on track, do nothing. When you're ahead of pace, that's a good place to be in. Now we're either on pace to get there faster. Again, we don't want to add any more risk to the system. Just because we get there faster doesn't, because we caught a few green lights doesn't mean we want to run a whole bunch of stop signs, right? So we get there quicker with the same amount of risk, or we want to take risk off the table. So instead of needing 17.8%, maybe we need less percentage. You're okay with the timeline. The timeline doesn't need to change. It means we can slow down and get out and, look at the scenery, right? We got plenty of time. We can slow down a little bit. We can take a break in our business potentially. We don't have to be so aggressive in our investments. Again, it's just a way to tell whether you're on track or not on track. But the problem is most people don't take time to get clarity on the things that they want. They don't take the time to plug into a simple calculator like certaintyapp.com to figure out whether they're on track or not and what level of risk they need to take on before and after taxes, right? This is just, again, I was not doing this for years until I learned this certainty operating system. I was chasing more and more and more. That's the byproduct of not having this, is you just keep taking on more and more obligations, more and more things, because you think that more and more money is going to solve your problem, but you don't know whether you're on track to fund your goals or not because you haven't taken the time to define it. I can speak on this because I did it personally. Crypto is another great example. What happened to me is that I created a scenario where we had massive explosion in some of the coins that we were holding. And I like to say I got caught watching the rocket ship take off. And so we made all this money, but I had no way of knowing whether I needed to take profit off the table because I had no idea whether I was getting closer to my solvable problem. I was just thinking, what if we hit another 2x? This particular coin almost did over 100x, right? So I got into this coin around 10, 12 cents. It went all the way to $18. Amazing. But what happened is I didn't have a mechanism to say how to pull risk off the table, how to identify whether I'm getting closer to my goals. All I said was, yeah, but if it does another 2 or 3x, I'm going to be set for life. And this is the challenge that we get caught into as entrepreneurs and as investors, is like we're just chasing more and more and more. So the solvable problem informs my behavior now. This is part of what we teach in the Whale Club, is teach you how to take this solvable problem and use your investments, because it's not just crypto, right? This is a combination of all the different things that you're investing in, whether it's real estate or stocks and bonds or crypto or gold. I mean, insert whatever your preference is for investments. All of these things are contributing towards your solvable problem, and we just need to know whether we're on track or not, because the solvable problem should inform our behavior, whether we should take risk off the table or we need to add risk into the system. So the 3 C's for the solvable problem is get clarity. Then you want to get certainty. We do that through plugging your number into the certainty app. Get your numbers, figure out what level of return you need every single year to hit, so that you know whether you're on track or not. And number 3 is the fun part. Now we can actually get there faster, or we can take risks off the table so we can enjoy the ride while we're getting there. So those are the 3 C's. That's the solvable problem. Hopefully you guys got value out of this. We're going to put the link to our Discord down below. We've got some other resources around some spreadsheets and different things like that we're going to have in our Discord. This is all going to be free for folks who are listening to this. So if you want to get some of those free resources on how to do this, in addition to the certaintyapp.com, we'll put that link down there as well. Jump in our Discord. It's totally free for anyone who wants to come in. We're going to have tons of free resources, not just on this, but on a lot of the other topics that we've covered in the masterclasses. So hopefully I'll see you guys there in the Discord. Hopefully you got value here today too. And we'll talk to you later.